Hi, everybody. It's Jack Meligan with you again from the SPI group. And this is our structured settlement rate update video. If you've seen these before, we've been publishing these rate update videos to keep you apprised of where interest rates are on structured settlement annuities. When we started this some time ago, it was interesting at that point because interest rates had skyrocketed so quickly last year and into this first part of this year that all of a sudden structured settlements annuities, which had terrible returns for 10, 15 years, had suddenly become quite attractive again. So we've been tracking that and sharing with you how those rates have been working out. And at this moment, I want to show you the 10-year, the 10-year, and within that, this is the 10-year bond screen, we call it. We'll do a little share screen here. So here it is. I've been showing you the same picture in all of these updates, and it's interesting to see. This is a 1-year chart of the Treasury bond, and we look at this bond because we know that these annuity companies are adjusting their rates to this 10-year bond. In other words, we know there's some tremendous sensitivity to the 10-year rate because whenever we see big moves in this 10-year interest rate on this Treasury bond, we can just about predict that we will see rate changes one way or the other, higher or lower, depending on which way it's going, from the annuity companies, and that is definitely happening. So this chart's interesting. Back here in March, we topped 4% on the 10-year, March 2nd. And then we bottomed here April 4th, it looks like. And then from there, we've been on a steady climb all the way to October 19th, where we just about crested the 5% magic Rubicon number on the 10-year. But 1 week, during the next week, we had a drop, followed by a retest of that high on the 25th, another drop. The market tried to push back up again and failed. And from Halloween to today, it's been, essentially down. What happened today that is significant today, being December 13th, is that Fed Chairman Powell announced no change in the Fed rates with regard to the interest rates that they charge overnight money and to banks and allow banks to charge each other, which is sort of that's the foundational rate that kind of drives everything else. So no change. What happened? Well, another drop here. We're right. We're just a hair above 4%, all the way back to where we were in March. So what does that mean for our structure rates? Well, we'll take a look at that next. And here's our screen with our latest. And by the way, you've seen these before. We attach them to this email at the bottom. You're free to print this out or send it to whoever you want to. You can use it with clients, partners, associates. It's fine with us. What this represents is it's not the best rate in the structured settlement annuity marketplace, but we have blended the rates of two fairly competitive companies to give you these rates. So you can see here that the internal rate of return, which is essentially interest rate return, on all of these annuities up here, these lifetime annuities, are ranging from 5.05 all the way down to 4.37. Our lump sums range from just a hair under 4 to over 5% on a 30-year lump sum. And then we've got a couple of interesting, these are 10-year, 20-year, and 30-year guaranteed payments. Then there seems to be an interest in a lot of cases with claimants who want a 10-year deferral and then 10 years or 20 years of guaranteed payments. So we've included that. And then down below here are where the lump sums are, and they range from 371 all the way out to 546 for a lump sum payable in 20 years. These rates, of course, have still been good, but the whole point of today's video is rates have been dropping on that 10-year, And the correlation with the annuity companies, we've cited it many, many times. And lo and behold, we've already seen 3 rate changes in the last 72 hours, including one this morning. So in our update video next week, these numbers will drop. But if you or a client are considering a structured settlement in one of your cases, be aware of this development and the fact that rates are changing. 3 companies have announced new rates that are lower. Generally, that means you have 7 days from the date of that announcement to lock in your client's payments and take advantage of the prior or the current higher rates before they go down next week. So also the attached to this email is our piece about that I've written about what your structure broker doesn't want you to know. Final comment: structured settlements are a great strategy. I mean, what's not to like about tax exempt lifetime payments if that's what you need. That being said, it's not the answer to everything that everybody needs or wants to do. It may not be the answer to anything that a particular plaintiff needs or wants to do, but what is the answer is settlement planning. We are big proponents of that. Settlement planning puts planning before products like annuities, structured settlement annuities, and all other annuities. Planning is where it's at. Planning is what uncovers your client's needs, and then also all of the options for meeting that needs. And structured settlements are just one option. There are many others, all of which we have. For further discussion, give us a call. This has been Jack Meligan with the SBI Group, and we'll be back to you again next week with another update. Take care.